So I came across a really interesting video here in the last 24 hours, and I wanted to share my take on this. And it has to do with the IRS. So if you're in the United States and you invest in crypto, make sure you stick around to the end of this video because this is something we all need to know. And I'll tell you what, I think there are some really good pieces to this new proposed regulation that is coming, and it impacts all of us when it comes to crypto taxes. So if you guys use decentralized exchanges, which most people do in crypto, right, on some level. So if you're trading ERC20 tokens, if you're trading on the Binance Smart Chain, you're probably interacting with one of the popular dexes out there, i.e. MetaMask, right? And right now, as currently constructed, they do not have what's called KYC, or know your customer, on these decentralized exchanges. Now, that could be changing, and that's why I made the title the way I did, because I think this is going to help not only us with just our taxes and the way we, get that data. A lot of that will be automated now for us. We don't have to go and maybe hire some outside people, and hopefully everything's buttoned up. And if you're a heavy trader, it's stressful, right? Because there's so many transactions that you're dealing with on a year-to-year basis. But it looks as if KYC could be coming to DEXs, and I want to talk about what that means for us as investors and what it means for the broader crypto market as well, because I do think this could help us and save us a little bit from crypto scams. And here's how. A lot of these crypto scams that come out, they're able to do so on these ERC20 tokens, and especially on the BNB side, because there's no KYC, right, through the DEXs. So I think this is going to deter some of those scams that are launched, and we've all been impacted by them, right? Whether it's been a big player that rose to prominence a couple years ago and we got all blindsided, or it's been just a new crypto project that we thought was promising and interesting until the devs run off with our funds, and there we go, right? That is one big issue with crypto. And I'll tell you what, if you haven't been impacted by this, I'd be shocked. We all have had some run in with some bad devs that have decided to basically drain the liquidity or slow rug us. And this is going to be much harder to do if they're based in the United States, right? So that's what I want to talk about here in this video. So it says here, digital asset reporting, how the IRS's proposed regulations could change tax collections. And I want to kind of just go right to this point right here. Major changes for decentralized exchanges. And there's a lot of different things out there still. A lot of it's not set in stone, but this is something I've seen talked about and written about now for a while. And I want to just make people aware of it, because that's what we do here on the channel. We want to make sure we're up to speed on all of this sort of stuff as we prepare for 2024. So one area that we'll see profound change, it says, will be for digital asset transactions that occur on a peer-to-peer level on a decentralized exchange. While not identical with the OECA CARF regulations, exchanges that operate a peer-to-peer exchange and receive income from facilitating the exchange will be required to collect know your customer information and report transactions between users. Now, we already have this when we look at centralized exchanges, right? And what's cool is when you're dealing with a Coinbase, for example, they pretty much gather all this data for you. Now, do they take into account all of the gas fees and token taxes? No. And that is why I always have hired some outside people to look at that, because those are write-offs technically, right? Now, will this new service do that for us, or will they just collect the transactions? That I don't know. We'll be keeping tabs on that though. But it says this type of requirement is going to be onerous for the exchanges because they are not normally privy to such information, and they're going to have to materially alter their business model to comply with requirements. So we're going to see what happens to some of our popular dexes if and when they're forced to do this. I just wanted to kind of make you guys aware of it now. We'll be keeping tabs on this in terms of timing and impact. So under the proposed rules, and information on sales and exchanges of digital assets in 2025 will be required to be reported in 2026. So it looks as if this change wouldn't go into effect, and for a couple more years. Now, while the current expected effective date is still a few years away for sales and exchanges, even that date is ambiguous given the time needed to review and address the expected volume of comments on the proposed regulations, as well as the time needed for the covered brokers to implement solutions. I had heard that they might try to push this through for 2024. Again, we'll keep tabs on it. I wanted to just make you guys aware of it as early as I could now. And I'll be definitely looking out for more information on this and bringing you up to speed on everything that's new regarding some of these new ways we're going to have to report digital assets when it comes to DEXs. And again, I think overall, this is a positive thing. I think it saves us as the investors time and energy. And it also probably saves us from cryptocurrency projects trying to launch and just straight scam us, right? And I think that's going to really deter some folks doing that. Again, if they're based in the United States, right? That's the other caveat there. So let me know what you guys think about this down below. I appreciate you guys for checking out the video, and thank you so much for watching.